Welcome to the show designed to give you crypto confidence. Created by the marketing communications specialists at Blocksparks, we want to help you learn about cryptocurrency and blockchain in a safe and friendly place. Because we believe this stuff is far too exciting to leave it to the geeks. Come and join us to learn more. So welcome back to our regular listeners, and if you're joining us for the first time, then welcome to the Crypto Confidence Show. Normally, our podcast is focused quite tightly on consumer issues around cryptocurrency and blockchain specifically, but today we're going to take a slightly broader perspective and look at where cryptocurrencies fit in to the financial technology picture in a slightly more broad way. I'm excited to have an interview to share with you, talking to Chris Wessels from Paybase, and Paybase are a payment gateway company. So they might be working in the background of online transactions that you do all the time without realizing it. And this conversation with Chris touches on a number of different elements, from e-money to payment gateways, merchant services, marketplaces, all sorts of things that happen without you noticing to make sure that when you buy something online, money reaches the right place and the goods come to you and everything is safe and regulated. We look at all sorts of things and talk about what might happen in the future, the role of different cryptocurrencies, including possible bank-backed cryptocurrencies and digital assets, and all of these things which are going to contribute to make a ever more safe and interesting consumer experience online interacting with money and currencies. So we don't have time for a crypto alphabet slot today, I'm afraid, because this interview did go into quite a lot of depth. We'll be resuming that in episode 12, so look out for that. And in the meantime, I hope you enjoy the interview with Chris. We'd love to know what you think. We're talking to Chris Wessels today from Paybase, and Paybase provide payment gateways. These are something you probably use regularly without realizing it, but Chris will tell us much more about this technology and what happens each time you click a Pay Now button. Welcome, Chris.
Thank you, Maya. It's lovely to be on the program. Thanks for having me.
It's great to have you here. Now, please tell us a little bit more about Paybase and what you do.
With pleasure. So Paybase is a regulated payments institution. We're regulated by the FCA, which is the government regulator here in the UK. And in short, we work with other businesses to help them with multi-party payments. So you could think of the overall model as B to B to C. So we work with other businesses in helping their consumers with payments.
Okay, so your customers are the businesses who need to collect money from people buying their products and services online, is that right?
That's spot on, yes.
Okay, so what's the difference for me as a consumer then? Where would your technology come in if I were buying something on the internet?
Great question. Well, I think from the end user's perspective, there are actually very few kind of transformative differences in the overall user experience. And I suppose by way of example, it might be good to talk about one of the target markets that we have, and hopefully that way I can highlight the differences in the services that we provide and the type of companies that we're looking to support. So for a moment, let's talk about Bob. Bob is an artisan crafter of handmade plates.
Wow.
He's great at what he does, has, real artistic promise. And his friends have told him that he should sell these plates online. So naturally what Bob does is, he sets up a business and he gets all of his ducks in a row and ultimately figures out that, he needs some help from a payments institution to collect payments online. So Bob will approach what is called a merchant acquirer. And a merchant acquirer is a type of bank that will take card payments or help Bob accept card payments on his website.
Okay, and so that's the shopping cart bit of the website when you're buying something. That's right,
yes, exactly. So, once I've added all the things to my cart and I ultimately want to make payment for that, that's the part that he needs help with. Now, when Bob goes to this payments institution, they are going to do due diligence on Bob and his business to make sure that they aren't taking payment for some illicit goods instead of the plates that he is selling.
Of course, yeah.
So ultimately, Bob goes through that process. He sets up his e-commerce store. Buyers come onto the website. They load up his plates in their shopping cart, ultimately check out, make payment. Every single payment that is made always goes to Bob, because Bob and his shop are the merchant. So every payment is in exchange for some goods that Bob has produced.
Yes.
Now, that is kind of the traditional e-commerce model. It's been around obviously for a long time, and we certainly regard that problem as being quite well solved.
It's quite easy now, isn't it? If you want to set up a website, you can just buy something to more or less plug into your website to do that, I think.
That's true, yes. But if we look at another example, because if you look at commerce, and more holistically how business has been changing, with the internet, e-commerce being a prime example of disruption that the internet originally brought, we're seeing disruption much beyond that. And one of those places is in the gig and sharing economies. So an example of a business in the gig economy is a business like Uber, where people are essentially signing up to a platform and completing gigs in exchange for payment.
So that's lots of people, presumably, and lots of customers.
Absolutely. And just to kind of round out the example on the sharing economy side of things, a great example is something like Airbnb, where as the owner of an asset, I want to share that asset with other people in exchange for some revenue.
Right. So would that be the same as if Bob was using something like a marketplace website to sell his stuff on?
Exactly. So here we come to the marketplace example. So let's talk about Alice. And Alice, identifies that there are a lot of people out there looking to buy handmade plates. This, of course, is a contrived example. I have no idea what the demand for handmade plates out there is. But
there's always there's a website for everyone and an audience for every site, hopefully.
Yeah. But so what we identified at Paybase is that this model is becoming increasingly popular as a way of buyers to find the things that they're looking for, but also as a way of sellers, either of goods or services, to sell those things in the most efficient way that's possible. And if we come back to Alice, who's looking at this existing market of handmade plates and those who want to buy it, it's a disparate market. You might have lots of small setups, lots of Bobs that have set up their own e-commerce stores, but they're all quite difficult to find, and none of them do fantastically individually, despite the demand in the market.
No, well, I suppose it takes Bob ages to make one plate, doesn't it? He's never going to have a huge inventory of lots of variety.
Yeah, well, maybe that makes plates a bad example, but let's presume that there is a huge amount of supply and demand, and so Alice sees this opportunity. Yeah, certainly, and Alice sees this opportunity to really aggregate all of the supply that exists in the market, all of the Bobs and their plates, into one place, one marketplace, and to really, by virtue of aggregating all of that supply and demand into one place, become the dominant brand in that market of handmade plates. Now, if you think about, that business, that marketplace for a moment, it's quite different to an e-commerce website.
Yeah, it must be much, much more complicated.
Absolutely. And if you kind of look at it for a moment, one of the key differences is that unlike when Bob is selling his plates online, where Bob is the only party that is ultimately receiving payment there. In Alice's business, she is signing up Bobs every day.
Mm.
And of course, signing up sellers on the other side too. So Alice and Alice's business are not actually selling any goods or services. They are merely, well, Alice's business is merely facilitating that transaction to take place. Is bringing the supply and the demand into one place and then allowing that transaction to complete in an easy and secure way.
Brilliant. So she's making money just for being in that middle place and having spotted that gap in the market, putting the audience together. That's fantastic.
Yeah, absolutely. But unfortunately, operating that business, or you might say fortunately, for the safety of end consumers, is quite a lot more complex, and there are quite a lot more requirements on businesses that operate in that way. You can imagine that if Alice is signing up Bobs every day, then just like when Bob goes to the merchant acquirer and they do due diligence on him and his business, Alice actually needs to do that as well. So every seller that signs up, due diligence must be performed on to make sure, once again, they aren't, engaged in some illicit activity that could obviously destroy Alice's business.
Yeah, so, and I suppose they're all over the world as well, and different currencies, different sales taxes.
Yeah, I mean, they may well could be. And so this model of business is beginning to eat e-commerce. It's beginning to, soak up a lot of the market share that was previously spread across these disparate e-commerce businesses. But it really does come with its own set of challenges. And we've spoken about due diligence on sellers, or indeed really anyone that payment is being accepted for. But then there are also some other challenges, like funds custody. So Alice's business is holding funds on behalf of sellers. Her business is accepting payment for these sellers and then holding that money on behalf of them. And that is actually no longer legal. It was legal for a while, but under PSD2, the Second Payment Services Directive, which was introduced fairly recently across Europe, there have been some changes that mean that any business that is handling funds on behalf of both buyers and sellers must be regulated.
Right. Well, that's a good thing. I'm sure it is.
It is, certainly for the safety of consumer funds. That's definitely a good thing. But again, it really increases the onus of responsibility and challenge that Alice's business has. So really, Alice's business, her marketplace business, is the type of business that Paybase supports. We don't support traditional e-commerce. We believe that is a well-solved problem. But this new generation of marketplace businesses, this new generation of business that facilitates commerce rather than sits on one side of the transaction, really has a unique set of challenges. And those are the challenges that we solve.
It's really fascinating. Yeah, no, I'm just thinking about me as the consumer when I want to buy a plate, and I Google artisanal plates or whatever, and I'm sure that Alice has got the win for the SEO, so she'll come up ahead of Bob's own website.
Yeah.
But for me as the consumer, I'll then have loads of plates to browse, and then when I click buy now, I'll actually have no idea of the complexity of the financial technology that's underpinning that, getting my payment for that particular artifact to the right person in a safe and regulated custody system, and so that they then pack it up and ship it out to me. And my experience will just be hitting a button and entering my details, or I might just be clicking on a PayPal button or something.
Yeah, absolutely. It certainly from the end consumer's perspective, it is that seamless. There's very little difference.
Fantastic. That's the ultimate user experience, I guess, that it's just easy.
Yeah. UX is a really important component of digital business. So it's a key focus for us. While we're on the topic of Paybase and how we help businesses, I think it's worth talking about some of the things that we actually do that allows us to help businesses like Alice's. So briefly, we obviously accept payments. Or at least help Alice in accepting payments. That's card payments, direct debits, bank transfers, all of those methods we can help Alice accept. And critically, all of this is API driven and as automated as we can possibly make it. So there's very little manual overhead in what is left up to Alice. Once the payments come in, we have a very flexible payments routing architecture, so we can split payments out. Obviously, on all the plates that Alice sells on the marketplace, she's going to want to take some kind of commission or fee from. So as those payments come in, we can split them, and split some of those funds off to Alice as part of her fees or commission, split some of those fees off to, say, an affiliate that maybe sent the buyer to the site in the first place.
Okay.
And then finally, the bulk of the funds you'd expect, depending on Alice's fee structure, would go on to the seller who has actually provided the goods for sale.
Oh, I'm glad to hear Bob still gets... Well, I suppose absolutely. He has to price his end fee accordingly to make sure that Alice and the advertiser and everybody gets their slice, and he can still afford to make his plates.
Indeed.
And ship them.
Other interesting pieces there are also, loyalty and rewards. So we provide really easy to use mechanisms to provide cash back to regular customers, to incentivize sellers to sell more, automatically lowering the fee that you take based on the amount of sales they've done. Right. All that kind of stuff we support. We support escrow, and of course, fully automated due diligence on the customers that we're required and Alice is required to perform due diligence on.
All right. So it takes a lot of that hassle away from Alice as the middle person. Then she just needs to provide the contact point, and then you do all the back end on the money side.
Yeah, absolutely. And really our goal is to allow Alice to forget about all of this super complex payment stuff, and really to focus on her product and on her customers.
That makes total sense. And for the customer, it just makes it as easy as clicking on the Pay Now button, and it all just happens on the back end. I mean, it sounds like it's come a long way in terms of payment history and the way things have evolved over the last couple of decades, moving towards these multi-payment sites. Just to get the crystal ball out for now and look into the future, we obviously normally talk about cryptocurrencies and things like e-money on the Crypto Confidence show. How do you see that interface evolving, and what role might cryptocurrency have in the future for online and international payments?
It's a tough question. I think we are early enough that your guess is as good as mine. But I can certainly give you some of my perspectives on this.
Sure. But it is fair to caveat and say it is all speculative at the moment. We were keen to talk to Paybase because we know you're open to talking about cryptocurrency and things that not every gateway of this type is really keen to. So, but we can just say this is all very much open air at the moment. I'll certainly give you my take, but I would advise a heavy dose of salt with it. Yeah.
I think there are really two pieces here. There's, the really transformative technology here, blockchain technology, which, is obviously what underpins the cryptocurrency use case. I think it is already beginning to permeate through the traditional financial technology ecosystem. And in some sense, we need to divide between cryptocurrencies, and specifically I'm talking about cryptocurrencies that have no counterparty risk, So today you have things like stable coins where you have a token and that token is backed by something, in this case, a fiat currency. But ultimately, owning that token does not automatically mean you own the underlying asset. So there's counterparty risk on that token. Whereas something like Bitcoin, if you've got the Bitcoin, that Bitcoin isn't backed by anything. The Bitcoin itself, and ultimately having the keys to the wallet that controls the Bitcoin you have is what gives you the value. And I think, it'll be difficult to predict exactly how non-counterparty backed tokens like Bitcoin will evolve. I think we can talk with far more certainty about how the traditional financial ecosystem will evolve with blockchain beginning to support it, as opposed to the more centralized technologies that have been prevalent, until today.
Yes, no, that makes sense. And obviously, in terms of being able to pay for something, you need some reduction in the volatility that's associated with a lot of cryptos at the moment.
Yeah, absolutely. Actually, that for me, I feel like it's worth kind of talking about some of these different designations and some of the terminology that gets thrown around. And I must also caveat this with, this is I think is one interpretation, and there's a lot of debate around the taxonomy or how to categorize certain tokens or certain cryptocurrencies, and what their use is and how to legally designate them and so on.
Absolutely. Yeah, we're going to see a lot more on that this year, I think. Maybe some clarity.
Ooh, yeah, don't get me started. That's a whole nother topic.
Okay, we'll come back and have that conversation another time.
Yeah. But, briefly, if we talk about the difference between, or let's talk about digital currencies.
Yes.
So I would say digital currencies are, any currency that is digitally represented. So that includes something like, the value of funds in your bank account. That is digital fiat. It is pounds or US dollars or whatever, but it's a digital representation. And so I would kind of juxtapose that with, is that a word?
Yeah, it's a great word.
With cash, which is obviously, that physical representation of money. But digital currencies, then you can kind of further subdivide. So, you have digital currencies that are fiat. And so you can obviously have funds in your bank account. And then the other thing you can have is e-money, where e-money is defined roughly as a digital representation of fiat currency, so central bank issued currency, that is not in a bank account. Right. So that could be with a licensed electronic money institution like Paybase. So, it could be that we are holding funds on behalf of Bob on Alice's marketplace until he withdraws those funds into his, UK bank account or whatever. Right. While those funds sit with us, and we are the custodian of those funds. Those funds are e-money, but the same is true of any funds that are kind of in transit. So if I'm sending funds from, myself to you, and I use a SWIFT, an international bank transfer, that can take a couple days.
Still, incredibly, it can take several days, can't it?
Yeah. But, while that transfer is in progress, the funds are neither in my account or your account. So while they exist within that kind of transfer network, that's e-money, Prepaid cards, another example of e-money.
Okay. I'd never really thought of that as a separate category of asset, but it is, isn't it? Because it isn't anywhere, and yet obviously you have to account for it
Exactly.
everywhere.
Yeah. So that's e-money, and I suppose what's critical there is, the value that you are holding digitally is denominated in fiat. And I suppose that's, slightly different to what are often called virtual currencies, and virtual currencies are essentially non-central bank issued currencies. So the most kind of common examples are skins in a game. If you're talking about esports and competitive gaming,
that's huge, isn't it?
Absolutely. And there are almost entire economies built up around the exchange of virtual currencies or virtual assets,
or even sort of virtual icons and artworks. And
exactly, yeah,
it's astonishing.
Absolutely. And so the key difference there is that, while these currencies or these assets have value, they're not denominated in fiat. So they may trade against it, but they're not held in it. So there's an inherent kind of volatility there.
Yes.
So keeping things simple, I would stick to that designation, but then you almost have to look at the other side of it, and that is the technology underlying the implementation of this currency or this asset. And so that I think is underappreciated, because when most people think of blockchain and crypto, they're thinking about these non-central bank issued currencies. There's no counterparty risk, but equally, I could have e-money, right? So a digital representation of central bank issued fiat currency, but tokenized on the blockchain. So, and I suppose this is effectively a stable coin.
Yes. So that's a coin that's pegged to a fiat currency, so everybody knows that one tether is roughly equal to $1, for example.
Yeah. Well, tether, I don't.
Okay, maybe that wasn't the greatest example. Okay,
but yes, I would say I'm not sure of the exact legal status of the company that actually issues tether, and I'm not sure how much you're just betting on the fact that the company will redeem that token for you. But certainly in the case of, say, Paybase, where we are a licensed financial institution and are regulated and have to abide by certain rules, if we issued electronic money in a tokenized form, there is still counterparty risk in the sense that the holder of that token is trusting that we will redeem it for fiat currency. And, the risk inherent to that is that, we would be required to perform KYC on that individual and make sure they aren't a criminal or whatever. And if they aren't, we can redeem that token for fiat funds. But critically, because we're regulated and we're actually designating that token as e-money, there is no real risk in the sense that the funds backing that token always exist.
Yeah, they don't require independent collateral.
Yes, and I would say the obligations of e-money institutions like ourselves, go far beyond. Well, maybe that's a stretch, but it's certainly in terms of deposits. A bank is obviously able to undertake fractional deposits and fractional banking.
Yes, they can lend out way more than they've ever got.
Absolutely, and a lot of people around stable coins and in particular Tether are concerned about that. That it is in fact a fractionally run operation, whereas e-money institutions do not have are not allowed to do that. So for every pound of e-money that we issue, we must hold pound for pound in a quite a special kind of bank account called a client segregated funds account,
right.
Which meant that even if the financial institution were to go under, those funds are actually entirely safe. They're segregated from the operations of the business. So that, naturally the counterparty risk exists, but it's pretty high assurance in that sense.
So you're held to a higher standard than banks, who are allowed to sort of create new money by setting a credit limit or something and then lending against that and all sorts of things. You have to actually have the money.
Exactly. I mean, look, I think it would be unfair to banks to say that we are held to a higher standard.
Well, it's a different form of regulation, isn't it? Because
exactly.
you're protecting an end consumer directly.
With the ability to do fractional deposits and banking, there's a very long list of rules that come with that I suppose is an attempt to protect the end consumer, but ultimately, not participating in fractional banking is just a fundamentally, full reserve banking, if you can call it that, is just a fundamentally superior system in terms of funds risk.
Yes, of course. And it's something that many people in the crypto space are very critical of traditional financial institutions like banks and the way that fiat currencies are run by policy rather than by mathematics, that these kind of things can happen. I mean, how do you think that's going to affect the role of banks and institutions in the future with the evolution of both cryptocurrency and e-money services alongside them and consumers interacting directly with them?
I mean, ultimately, the funds that we hold as an e-money institution, I mentioned that for every pound in e-money that we issue, that we assign to someone digitally, we obviously need to have a corresponding pound in order to do that. That money, as I mentioned, is held in this special client segregated funds account with a bank. So the bank is not allowed to lend that money out or invest with it, or that money is protected to an extent beyond a typical consumer's banking account. But ultimately, banks are still part of the system that is e-money.
So do you think they always will be? Will we always need banks?
I think certainly for the foreseeable future. This is coming back to that question of, I suppose, central bank issued currencies versus cryptocurrency that, have value due to consensus and trust in the cryptography and mathematics that, effectively allow all of that to work. As I said before, I think it's going to be very interesting to see how the incumbent financial system deals with the introduction of these, non-sovereign or non-nation state currencies. I think, in many senses, it's unprecedented.
Yeah.
We've had similar things before, but they've always been centralized, which has meant that the incumbent system has had means to deal with them.
And they've pretty much been able to dictate how it goes, I suppose, when they introduced SWIFT transfers and things like that. It all came from the banks, whereas now this is happening outside of all of those traditional institutions and seats of power.
Yes. So I think it will certainly be interesting to see how things evolve over the long term. And I can see how, from a consumer's perspective, holding some asset with some fixed monetary policy and a distributed and decentralized scheme of control is definitely attractive. So we'll see how that plays out in the long term, but certainly in the short term and the midterm, I think we're just going to see more and more interoperability between fiat assets and crypto assets.
Yes.
And so I suppose now is a good time to mention that one of the market verticals that Paybase is actively supporting and is, we see great promise in is cryptocurrency. Both in kind of non-central bank tokens, but also, counterparty backed tokens. And we know that these businesses are experiencing huge challenges around fiat interop, because the legacy financial system is, I think, apprehensive around this stuff.
Definitely. We even have that on a very small scale within our own business, that some of the companies we work for prefer to pay us in cryptocurrency, which is fine, but it's not been an easy job setting up a payment gateway that's acceptable to our accountants in a completely satisfactory and transparent way to make sure that we get paid at a fixed rate.
Yeah, absolutely. So I would, just to the audience that's listening, I would say we really do have appetite to support cryptocurrency businesses, especially with their endeavors in interoperability with fiat currencies. We can take away the pain of managing the fiat side of your operations, and certainly help with the KYC and due diligence components of the business so that you are safe in the long run. We absolutely see significant oversight and regulation coming to cryptocurrency businesses.
It's going to be a big theme for 2019, isn't it, that one?
Absolutely, yes. So I think the best position that a cryptocurrency business can be in going into what will be an increasingly regulated and watched environment is to have the right procedures and processes in place to satisfy the regulators. And remember that a lot of this stuff is to protect the end consumer, to stop fraud, to stop crime, to stop money laundering.
Absolutely. And that's what we all want, combined with opening up that choice for the consumer to pay with whatever currency you like, whether it's fiat sovereign currency or something purely a digital asset.
Yep. So I would say to any crypto founders or businesses that are having trouble with fiat interop or would like to add the ability to for their customers to send crypto but get out fiat currencies, any crypto businesses that are having problems with banking, anything like that, please reach out.
There are solutions now, and Paybase can help you.
Absolutely. One more thing I would mention is we are actually doing a bit of a survey of the market. We'd love to understand better the challenges that crypto businesses are facing. We know banking's a challenge. We know card acquiring or card payments for crypto business is a real challenge. But we'd love to hear more. So I'll give you a survey link, and if we can drop that into the video description.
We can certainly put that into the show notes. I mean, most of our audience are consumers, but we know that the crypto space is so small and interoperable of itself that there are fewer boundaries between people being strictly on the business side or on the consumer side or on the development side and so on. There's much more interaction. So hopefully we can give that survey a bit of a wider airing for you. But just taking it back to the consumer then, in order to wrap up, what do you think it's going to mean for me when I want to buy one of Bob's plates in a few years' time and I click on that Pay Now button? Will my experience have changed at all? What will my choices be?
Do you know what my hope is? That things will be even better than they are today.
Great.
I think, especially if you compare things to card payments, card payments have some real challenges, and we haven't stepped through kind of how that works yet, but I know we're slightly short for time.
Yeah.
But some of the challenges there, are cost, but also, it's quite a long process. So after you click pay online, even though the payment is authorized, it can take a couple of days, 2-3 days for that merchant to actually receive their funds. And that is entirely down to the way that the card schemes work today. And that obviously introduces risk in various places, in the sense that products or services have been dispatched or provisioned, and there's a delay in actually receiving the funds for those.
Yes, so different with crypto.
Exactly. I think the efficiencies that we are likely to see as a result of blockchain, really, crypto being one use case, but
yes,
blockchain, across crypto and the traditional financial system, should really increase the efficiency of these payment transactions massively. And so my hope would be that payments only become easier, faster, more seamless, lower cost, etc. And I do think that crypto, has a huge place in this, as does blockchain. And I would highlight that blockchain being applied to traditional finance, I think will mostly be invisible to the end consumer.
Yes.
In the sense that it's unlikely that the end consumer is actually going to hold a cryptographic wallet in the short term with their own private keys and so on. But in the crypto use case, that certainly would be the case. They would have their own wallet, and they would need to manage that side of things themselves. And so I think the biggest challenge that we will need to solve, as an industry, is the user experience around blockchain right now. And that is, that breaks down into a few pieces. There's the education challenge. I suppose it's debatable how much real knowledge an end consumer needs to have about a blockchain. Do they just need to know that it's a network of I suppose accounts that are connected together?
Yeah, we try and focus at Crypto Confidence on the need to know aspects of it, really, because it we're all fascinated by it and completely geek out on it. And some of the things I find most fascinating are the things that are least important in the day-to-day interaction. So we try and point people at additional resources if they really want to understand how hashes work and things like that. But you probably won't need that when you want to buy a plate. So
yeah, well, I certainly hope not.
No.
But the traditional financial ecosystem certainly has some user experience and usability features that are missing from crypto today. The ability, if you lose your passport or your ID, the ability to go to your bank and to prove your identity and regain access to your funds. That's a real usability feature. Similarly, if something goes wrong, or your details, or your identity is compromised, and there's a bunch of fraud on your account, your bank can reverse that.
Yes, they will look after you. Yeah. If you want to dig into that in more depth, then do check out episode 3, anybody listening, where we dug into a lot of detail about why the blockchain doesn't care about you. Your bank does, blockchain not so much. So very, very different.
Yeah. Not your key, not your coins.
Indeed.
So yeah, I think education around blockchain, wallets, but also on some blockchains like Ethereum, or I should say maybe something like Neo. I don't know how many of the listeners know Neo, but to actually process a transaction in a smart contract, you need to pay with an asset called gas that is actually separate to the asset that you are transacting with. And there's I can't think of anything like that anything like that paradigm in the traditional financial system.
It's a bit different, isn't it? I suppose there's bank charges, but they're always in the currency that you're used to paying with. We have a segment on gas charges in the crypto alphabet section in episode 10, by the way. So check that out if you want to find out what we're talking about now, because it is kind of strange when you're used to traditional money.
Is that on Ethereum gas?
Yes, it is, but it works in a very similar way to Neo and on other blockchains, that you have to just charge the pump in order to do anything on certain blockchains. And it is so different. And what we really are aiming for is hopefully a user experience that feels pretty much the same as to when you walk into Bob's shop on the high street, pick out your plate and hand over your money or your credit card. But we're getting there, aren't we? And I think Paybase and gateways like that are going to be part of the future, as is the education we're providing here through this podcast. And I think the future's bright, don't you, Chris? I think it's going to come together.
Absolutely. It's only a matter of time.
Yeah, we'll keep working towards it. It's been a really interesting conversation. Thanks so much for coming to talk to us today. And I think we might have to circle back later in the year and look at how some of this changing regulation and technology is bedding in and what that's meaning for consumers.
Absolutely. Thank you so much for having me. It's been a pleasure.
Thanks for listening to Crypto Confidence. If you like what you hear, please do consider leaving us a review via your favourite podcasting app and joining the conversation online in whichever way you prefer. Full contact details are in the show notes for this episode. And remember, nothing in this podcast or our related social media, nor anything else published by BlockSparks OU at any location, is intended as financial, investment or trading advice. Everything we write or say represents our personal opinions for your information, education and entertainment only. You should not make any decisions based on anything we share with you, not without undertaking independent due diligence and consultation with appropriate professional advisors. Crypto Confidence is all about being smart and informed and making the right choices for you.